Price action is one of the most powerful trading strategies out there, also one of the most misunderstood. In this video, we'll be going over key concepts that define what price action is. Well, price action is a trading strategy that has market structure at its core. And what this trading strategy does is we are looking to exploit repeated behaviors within the market and repeated patterns too. This strategy is one that relies on information that is current and not lagging. So in essence, we are not using indicators to define or to understand what the markets are trying to do. Price action uses real-time data. You're using candlesticks, patterns, structures, and key levels in real time to define what you want to do, what your objectives are, and understanding where the markets are trying to go. So why price action? Well, like I mentioned, the information is real time. You're relying on candlesticks, current price action, current price data, and current price behaviors to define what you want to do. So what are the key elements when it comes to price action trading? Well, first of all, we have market structure itself. Market structure is essentially the picture that market has printed, where market is going and where market isn't going. In order to understand market structure, you need to understand what a trend is. A trend basically is the direction that a market is going, whether up or down. We have three types of trends. We have a bullish trend, a bearish trend, and then we have ranges. Ranges are something we should not be interested in ourselves. After you've understood what trends are, what defines a trend, what defines a bullish trend, and what defines a bearish trend, you then need to understand the next concept, which is marking out key levels. Key levels are essentially turning points within charts. These are places where price has shown to historically reverse from or form some type of reaction from. Key levels are essentially areas of values where we take our trades from. We have different types of key levels. We have major highs, major lows, and then we also have areas of values that are not necessarily major highs or major lows, but within that price, within that leg of price action. Key levels are important because essentially this is where we are taking our trades. Everything in a sense boils down to identifying key levels, identifying those areas where prices might either react to or reverse from. Okay, the next concept you need to understand are patterns. Patterns are behaviors that print themselves repeatedly within the markets, right? So you have historical data, you go back and check your data, you see certain things that happen, you're like, okay, this and this usually forms, and then this happens. So that essentially at the base levels is what patterns are. We have lots of different patterns, and this is case by case when it comes to different strategies, right? But for our strategy, for price action, and for the relevance of this video, we'll be going over four. We have break and retest. Essentially, this is price breaking. Should I explain it in depth? Next video. We have break and retest pattern. We have breakout patterns. We have double bottoms, double tops. We have triple tops, triple bottoms, and then we have breakouts, break backends. We will be again going over these patterns in depth in our future videos. And then our last concept, behavior. Behavior is the story that price is telling after taking all these things, all these concepts together. What is that story? What is price trying to tell you? We take patterns and how they're reacting on key levels, structures, what they're doing or not doing to identify how markets are behaving, what the markets are trying to tell us. So behavior can show us whether there is a depletion in momentum in the markets, whether there is a spike in volume in the markets. Essentially, the story that all the things that we just talked about is trying to tell us. Why is behavior important? Well, we say we trade price action, we say we trade market structure, but in reality, we look at market structures and patterns, what behavior the market is trying to show us, and then we end up trading that behavior. right? So in essence, we're almost trading behavior. What we're doing, we're behavior traders, and since it's real time, we need to be able to identify this behavior quickly. So a summary of our key concepts: understand market structure, what are trends, what are bullish trends, what are bearish trends, understand how to mark out key levels, understand patterns, the most relevant ones for price action trading, and then finally behavior, the story when we take into account everything that we just mentioned. What are the charts trying to tell us? That is behavior. I will be going in depth with each individual concept in future videos, and then we will be posting a lot of technical analysis video, how to map out your charts, all the different concepts, again talking about them individually and then how to bring them together. So if this is something you're interested in, do consider liking and subscribing, and hopefully see you in the next video.